Good afternoon, everyone. Thank you so much for joining us to learn a little bit more about increasing your cash flow on this evening. We are glad that you're here and want to get started with a couple of logistic things. My name is Sarah Scruggs. I am the Community Engagement Specialist here at Harvard University Employees Credit Union, and Migdalia Gomez, the Community Engagement Manager, will be taking over about halfway through our presentation today. So we are glad and here to help you and learn a little bit more about how we can best provide you resources. For today's webinar, we've gone ahead and muted all attendees so that way you can continue doing whatever you need to do during this time, and hopefully you can hear us more clearly. And so the first thing we'd like to do, we hope this doesn't deter anybody from asking questions. If you can find the questions feature either on the right-hand side of your screen or up at the top navigation, and in the questions feature, if you could let us know, number one, so that I know you can hear me, and number two, so that I know you know where the questions feature is, if you could put in there where you are joining us from today, that would be great. That way I know you know where the questions feature is. And if you have questions throughout our time tonight, please know this is where you can submit them at whatever point in time you have a question. It is in this questions feature or chat feature where you can let us know what thoughts you have, what questions you have, if there's anything that we can do to further clarify. So if you could put in the question or chat feature where you are joining us from tonight. Wonderful. I see someone's joining us from Somerville, Everett, Boston. Great. Awesome. Thank you so much. So continue putting those in the questions feature. That way we know you know where the questions feature is. But to let you know, this presentation is being recorded and it will be posted on our YouTube channel. And that will probably be going up on Thursday. And we will also send all of this in an email to you. That way you have the links to everything. If there's something that you don't quite catch or want to go back to once this is over, you can have that information right on hand. So we'll be sending that in the email to you. So please know that we are here to help with that. And if there are questions that you have afterwards, you'll have our contact information and you can get in touch. We do ask that you take a survey for us at the end of our workshop and let us know how we did today. We'll put that information in the chat feature so that you can have that on hand, and it will also be in our follow-up email. Telling you a little bit more about the credit union, Harvard University Employees Credit Union is the not-for-profit financial institution of Harvard University. We exclusively serve the Harvard University community, including all affiliated hospitals, which of course includes Beth Israel. So all of you are eligible to become members of the credit union. We believe we have everything that a bank does, we just do it a little bit better. If you have questions about how the credit union can help you in your financial situation with any of the financial products that you may need, we're happy to answer those as well. But today we are really here to learn a little bit more about increasing our cash flow. So I want to get started on that for us. So when we break down increasing our cash flow, we really thought for this presentation, we wanted to focus during a time when many of us may need to have more access to cash flow or maybe want to build our savings at this time of uncertainty as we get back into more of a normal routine in the months to come. It may be good to think, okay, I want to make sure that I have an emergency fund or that I'm able to come out of this having a little bit more in my savings account so I know exactly where I want to be in the future. So there are really three ways to increase your cash flow right now. The first is reducing expenses. Of course, this is probably the way that is most well known to all of us. How do we get more money? We spend less of it. That is pretty much the gist there. But we're going to go into a little more details about how we can do that, what in a way that's best for us, not only how we can do it, but how we can build it into a sustainable practice. And then also deferring expenses. When there is a need for increased cash flow, whenever that time may be for you, there are times where it's best to defer expenses that we do not need to pay right now, to pay them in the future so that at this point in time we can increase our cash flow, build that emergency fund, or increase the cash flow to be able to pay the bills, things of that nature. And then the last one being actually increasing your income. And we'll touch on that a little bit, but we're going to mainly talk more about reducing our expenses and deferring our expenses today. So we'll get started with reducing and deferring our expenses. The most important thing when we're thinking about reducing and deferring expenses is understanding that where we are right now is probably the most important step. And so when we're thinking about our cash flow, if you do not have a budget at this point in time, that's totally okay. I know for myself, I didn't have I would say a usable budget for a lot of my adult life, but now I've made sure to get a budget that's realistic for me and my spending patterns. And that's something that's really important. And so I highly recommend, if you've never built a budget for you and your family before, and if you're able to sit down maybe this weekend, maybe a night this week, spend some time working on a budget that would work for you and your family. To be honest with you, I cannot give you a special formula that will tell you this is how you should budget and it will work for everybody, because that's just not how our minds and brains work around these types of things. Each of us is very different, and this is a very personal experience. One place that you can find a budgeting worksheet, if you've never built a budget before, is on our website, hub or huecu.org/hub. And you can find that McDahlia just put that in the chat for you all to grab and see. And this is a good worksheet to start with because it does take you through your total income as well as all the expenses that you possibly have. And this will give you that bottom line, which is what all budgets are built on. All budgets are built on your income, your expenses, what's the bottom line, right? So all basic budgets are the same, but this one is really good because it sets it out for you in a way that's extremely easy to understand and an easy way to read. Let's say that maybe you're not so much of a do it on paper and pencil kind of person. Maybe you appreciate more using online resources. Using a budgeting tool is a great way to do this online. The credit union does have one on our online banking system, not through our app. You first have to go set it up in the online banking system, so actually on a desktop, and then you're able to use this budgeting tool. And this automatically takes all of your expenses that you're spending from your bank account and calculates them. If the credit union is not your financial institution, that's totally fine. Many financial institutions have this ability, have the ability to track those expenses automatically. Another one that people use a lot is an app on your phone. So if you've ever heard of Mint, a lot of people use that app. But this is really what we want you to see, is that before you can really talk about reducing your expenses, you first have to know, what am I spending my money on? Because if you don't have a clear picture of where each of your dollars is going throughout the month, then you're really not able to reduce those expenses, because if you don't know you're spending money on something, it's difficult to reduce that expense. So I highly recommend setting out a budget for yourself and really tracking that spending, saying, okay, what am I spending money on and how much? And that way throughout the month, you can check in with yourself and say, I really wanted to spend a little less on this. I really could spend a little more on takeout this month. That's good to see. That way you can continue checking in with yourself. So can you minimize or defer expenses? This would kind of be that next step. You've got your budget, you've set it out, you've tracked your spending, you've seen, okay, I'm spending this much on rent, this much on my bills, this much on eating out, this much on, riding Uber in regular days. And so you've really set out all of your spending. So now you're looking into each of your transaction and purchases. Can you minimize any of your expenses? What are some things on your spending that you're seeing and you're like, I really don't need to spend that much? I know sometimes for me and my husband, we will really see, maybe I don't want to spend that much on doing things quickly. Like we'll go to USPS and pay for the upcharge to get it sent somewhere just a little bit quicker, even though we really don't need it there for a while. So sometimes little things like that can really add up. So the first is refinancing. Magdalia is going to speak mostly about refinancing today in our presentation, and hopefully a lot of you have questions about that and are wondering about that, but we'll speak to refinancing later, so I won't go into detail there. The next is strategizing your spending. The reason why we say strategizing your spending is because we want you to think, what is important to me? What do I want to spend my money on? And this is really important, I think, to kind of change your mindset. We're not asking you, you know what, get rid of all the things that make you happy on your budget. Stop spending money on those things because that's just not sustainable. And we really want this to be a sustainable practice for you. So strategize where your money is going. Say, these are things that are important to me and I want my money to go towards this. And then say, what are some things that I can cut back on? What are things that aren't as important to me? For us in my household, it's definitely not as important to us to go out to eat a lot. We do a lot of cooking at our house, and so buying groceries that we can make really good meals with is important to us. But what's not as important is making sure we have enough money in our budget for delivery fees or things of that nature because we just don't go out to eat as much. And so really strategizing where you put your money and where you spend it is important because it helps you feel in control, number one, of your spending. But number two, you're also putting more value towards your money and you're actually getting out of it what you deserve to get out of your money. The next one is reducing ways or researching ways to reduce your spending. This is one that will take time. So this is one that you really, really want to work on if you want to buy maybe a larger item, or is there something in your everyday life that you can get a coupon for or sign up for? I know for myself, I have some rewards apps for different grocery stores. Stop and Shop recently changed their rewards program, so I've signed up for that. And maybe with Starbucks, when I go get my coffee, I always get the stars on my app so that I can get a free one. But these are really important because we don't want you to research ways to reduce your spending if that's actually going to make you spend more. Some people, when they see something is on sale, myself included, when I get emails that it says like last day of sale, I love to click on those and just browse. But what's important is that you're researching ways to reduce the spending of what you're already spending money on. So we're not wanting to take on new spending at this time because we're wanting to increase our cash flow. So let's say there's something that we can reduce our spending on. Maybe that is, you realize, you know what, the cheapest grocery store in my area is one that I haven't gone to a lot, and it could save me $10, $20 each time I go to the grocery store. Maybe it's worth going to that grocery store instead. So really taking time to do this research for the things you're already spending money on is extremely important, but making sure that you're not researching ways to then go ahead and spend more money than you normally would. And then deferring expenses, kind of looking at the other side of the coin. When we're minimizing expenses, we are taking out expenses, so we're not paying any money towards those. But when we're deferring expenses, this is when we put it off for a certain amount of time. We know eventually we will pay those things, but right now we want to increase our cash flow. So what are things we can do right now to possibly set us up for spending on these things a little bit later? The first being federal student loans. If you hold any federal student loans, they have been at 0% interest and they have been stopped from automatic payments since March of 2020, and that will last until the end of September of this year. And so this technically is an expense that you do not have to spend on right now. This is great because it's also not accruing interest right now. This is a really great opportunity if there are other debts you possibly want to pay on, or maybe save up a little bit for an emergency fund. Maybe this is the money that you can put aside for that month to month instead of spending on your federal student loans right now. if you have the money to be able to pay your student loans right now and you feel like you have a good emergency fund, all your other debts are pretty much taken care of, then maybe you can go ahead and spend that money on federal student loans. But if you're really wanting to increase your cash flow right now, it's maybe a good time to shut off those payments for your federal student loans because we don't have to pay on them until the end of September. But keep in mind that your budget may need to change at the end of September to get ready for those going into payment once more. Skip a pay is another option. This is very normal for things like credit cards with different financial institutions. You can sometimes ask if you could possibly skip a payment with them. So let's say that you have a 12-month loan with a company and you say, you know what, I think in May, I would like to save this money, put it towards something else, put it towards bills that are coming up in May that I really need to pay off, and not put it towards this loan at this time. A lot of financial institutions will let you skip 1 month of that payment so that you can hopefully spend it on something very necessary at the time. But then that will add 1 month to the end of your loan, to the life of your loan. So you will be paying it back just at a later time. So remember that if you do decide to do skip a pay. A lot of financial institutions are recommending skip a pay right now if you need that service, but do know that it is normally available to folks. It's just a little bit harder to find when we're not in a pandemic. And the last is utilities. Here in Massachusetts, the governor has declared that no utility company can shut off your water or your electricity while we are in the COVID-19 emergency. So if you are not able to pay those bills, your electricity and water will not be shut off, but it is important, and I really want to stress this, it is important to contact the utility companies and ask them, tell them, hey, I'm having a hard time paying these bills right now. Is there any way that you can help me? And they will try to help you in ways that they can do their best. They want to make sure that their customers are taken care of, and they know they can't shut off your utilities at this point. So they're going to try to work with you and work with what you have at this moment. So I highly recommend getting in touch before you just stop paying. It definitely helps a lot to get in touch before you just stop paying. So now we have a question for all of you. Through the questions feature, either on the right-hand side of your screen or at the top navigation, it also may be called the chat. Why don't you put in there one way that you save money? What is a way that you save money? I'll give you a couple moments to think about that. Okay, getting a couple of answers. It looks like some people have said they save money through taking cash instead of their credit cards everywhere. That's definitely a big one. If you only have a $20 bill to spend, you only have $20 to spend. Awesome. That's a great idea. Okay. All right. It looks like somebody said they use automatic savings from their paycheck. So they get a little bit of money taken out of their paycheck and put towards their savings each month. That's really great. If you're automating that savings, that way you don't even have to think about saving, you're just doing it automatically. That's the easiest way. That's great. Awesome. Yeah, this person said that they're very flexible with their budget. And so some months they can save a little more and some they save a little less, but they're flexible and they make it work. Great. Wonderful. Thank you for answering that and thank you for taking the time, and please keep putting your ideas there. We definitely learn best from each other. Oh, it looks like we got another one. Oh, awesome. So someone said they definitely do the cash method and it's always worked for them. They've never spent over their cash amount. It's true. It's definitely helps you rein in the spending if you're just kind of out and about. You have that amount of money to spend, you really can't spend over it. So please continue putting these things in the chat so that we can hopefully share with each other and talk a little bit more about how we save money. So a couple of things that we had on our mind, setting up a balance alerts or spending alerts. If you use a credit card, mostly for your spending, I know for myself, I get notifications every time my credit card is swiped. It tells me, you've spent 17.53 at Target. And so that way I know exactly how much I'm spending on something. And it helps to remind me, okay, you know what? We've gone a little out of control this month with coffee shops, or for me and my husband, some days it would be the grocery store. We really love going to the grocery store, and sometimes we just spend a little too much. But it helps you in real time understand, okay, maybe I've spent a little too much. Using separate accounts. So let's say you want to save for something specific, like an emergency fund. We'll go with that. When we're saving for an emergency fund, if we name it emergency fund and have part of our savings there, the next time that we need an additional $20 for something, or maybe we found something cool on Amazon, when we see, you know what, the only money I have saved is in my emergency fund, we probably won't use that towards something cool we found on Amazon, because we'll hear in our mind, this is for our emergency fund and we want to take care of ourselves in the future. So using separate accounts really gives you the accountability of saying, helping you think through it. Okay, so they're saying, this is actually saved specifically for this. Don't you want to continue saving for that? Automating your savings. Someone in the chat already let us know that they've done this. Adjusting your budget frequently. That's what somebody said. Definitely being flexible with your budget. Every month doesn't look the same. I know in my house, our electricity bill, when it comes to July and August, goes way up. We love the air conditioner. So it's totally different than in the winter when our electricity bill is extremely low. So you have to adjust your budget to account for things like that, and to account for things like unexpected purchases or things that you need in your house. Using cash, absolutely. Finding discounts, definitely. And like I said, find discounts for things that you are already going to be spending your money on. If you would not have bought it if it wasn't 40% off, you're not saving 40%, you're actually spending that 60% that you weren't planning to. So that's a good way to think about it. And then reviewing your spending frequently. This is really like thinking about adjusting your budget. Really take a look at your spending and say, am I putting my money where I want it to go? Am I putting my money where I want it to go and where it means most to me? That's an important thing to review and to keep up with, because that answer could change quite a bit. If you've never made a budget before, or if you're somebody who kind of wants a check-in on the budget that you have, our partners at Greenpath offer free budget counseling to everyone on this call. All you need to say is that HUECU referred you. Greenpath Financial Wellness is a nonprofit, and they work with all of our members on setting up those one-on-one conversations over the phone. They have hours that go until 10 p.m. during the weekdays. So if you're at a hectic hospital schedule and you're not able to get free time until later in the evening, they do have those hours for you. And they also offer free credit report review with accredited credit counselors, as well as COVID-19 counseling. So if there are questions that you have specifically regarding your budget or credit, they're a great place to start, and they'll be happy to help you. So a really great resource that we have for you. It is free for you as well as anyone in your household. So please know that this is available for you all. And now I'm going to toss it over to Migdalia Gomez to share a little bit more about refinancing.
Thank you, Sarah, and thank you everyone for joining us. And I see that many of you have used the questions panel. Feel free to continue to use it throughout the rest of today's presentation. We're here to provide you information, and we want to make sure that if you have any questions, we're giving you those answers before you log off. So refinancing is a big way of saving money, and that's what we're going to focus on. But before we start talking about going into details about refinancing, we're going to see on the next slide that we're going to actually define what refinancing is. We know that we all have different financial backgrounds. Some of us may come from different countries, or even if even within the US, not every high school teaches personal finance. So we want to always make sure that we're all on the same page. So what exactly is refinancing? Overall, refinancing is taking the debt from one company and bringing it over to another. So it's taking loan from company A, bringing it over to company B. And the benefit of that typically is that you have a lower rate. You typically will get a lower interest rate. And that's really why most people will do it, is because of that lower interest rate. But there are times that you may decide to refinance and you may not get a lower interest rate, but you may do it because it's going to give you a longer term. So we are talking today about increasing that cash flow. And in doing so, maybe your loan is a loan that you have for 5-year pay, that you could pay it off in 5 years. And that monthly payment is just not enough, is too much, or it's causing complications in your budget. You may decide to refinance and make that 5-year loan into a 7-year loan. That will increase your cash flow, but be mindful that that would also most likely, depending on the interest rate, increase the total amount that you owe. And we're going to go through a couple of examples so you'll see it. But refinancing, I want to point out, with most refinancing options, there typically is no prepayment penalty. And this would be beneficial in cases that you are able to get a promotion at work, or maybe you get a bonus, or you complete your taxes to get a refund, or there's another way that money comes to you and you want to accelerate paying off your debt. You always want to make sure that there are no prepayment penalties, because we're trying to increase our cash flow. And if we do get that increase or that quick boost of cash, we want to make sure that if our priority is to pay off debt, that we're not penalized for doing so. There are going to be a couple different things that we recommend considering before going into a refinancing situation. Interest rates, I'm going to focus on in the upcoming slide, so I'm not going to talk too much about them right now. But I do want to point out benefits and credit scores here. When you refinance, remember, you're taking the loan from company A and bringing it over to company B. That means that you are no longer paying company A. Company B pays off company A. All of your business is now with company B. As a result, any benefits that you had with company A are no longer going to carry over to company B. It's a new loan. This is very common when it comes to the federal student loans. If you have federal student loans right now and that interest rate is at 0%. Had you refinanced that federal loan to a private student loan, as many people have, no one anticipated that the federal government would ever go to 0%. So many private lenders had significantly lower interest rates. But now those individuals that have those private student loans, they cannot benefit from that 0% loan because that is with the federal government and they no longer have that loan. I like to think of this, if you live in an apartment or in a house, and let's say it currently has a great dishwasher or a great patio or porch, whatever that great feature is. Once you move, you cannot go back to that house, that apartment, and utilize that great feature because you're no longer living there. The same concept when it comes to that loan. It's now a new loan. You cannot go back and take advantage of the benefits that you previously had. So it's important to just review those benefits before refinancing. As for the credit score, that's another piece that's really important. Your credit score, the higher that it is, the lower that interest rate that you typically will qualify when you are doing a refinance. And that's the majority of the time why people tend to be able to get a good rate when they refinance. It's because they have a higher credit score, so they're eligible for that lower interest rate. There are going to be times where it may make sense to focus on your credit score before refinancing. For example, if maybe you have to pay off some debt or do a couple little things that maybe will take a month or two to improve your credit score, and afterwards you're gonna save maybe 1 or 2 percentage points with the refinance, it may make sense to focus on that credit score first. Everyone's credit situation is different. That is why we partner with Greenpath. Their information is on the chat, and you also will get their information in the email that we send afterwards. Greenpath can do one-on-one credit counseling. They can review your credit. It is free, will not impact your credit score negatively. They will be able to help you. So this is something I would recommend if you're not quite sure if your credit score is on the cusp to, I would recommend contacting Greenpath. But if your credit score isn't as high as it can be and then it goes up higher in the future, that's great. You can always refinance again. You can refinance multiple times, but if you are going to be doing that, keep in mind the terms, because if you continuously refinance and extend the term, you may end up paying more in interest. So just always want to do that math. Now, I talked a little bit about rates and how I was going to talk about them. So I wanted us to really focus on what does it mean to get a lower rate, or why do people refinance? Well, there are different rates, and rates change pretty often, especially during these times. We are in very, very low rate market, which is great for when you're borrowing. It's not ideal when you're saving. But right now, if you have any outstanding debt and you're trying to increase your cash flow, one of the best things you could do is shop around for rates. And by shop around, I mean, if you are interested in refinancing and you do that within a 2-week period, that will count as one credit score inquiry, and that will impact your credit score, but it won't impact it as much as if you applied for multiple loans over more than that 2-week period. So if I'm looking for a personal loan, maybe I go on to 3 different websites and apply there during that 2-week period. That will count as one inquiry versus if I applied for 3 different personal loans over the course of 2 months. That's going to count as 3 inquiries, and it will have more of a negative effect on my credit score. So what are good rates right now? For personal loans, if you have a personal loan, anything over 5%, I would look around. And some lenders are going to vary. I would always recommend start with your financial institutions, see what they have to offer, ask around. You can search on websites as well. But for personal loan, if you have anything over that 5%, I would look for lower, see if you can get a lower rate. There are specific refinancing loans as well. Mortgage refi, you probably have seen it all over the news. That's a really, really big one because the rates are extremely low. They did go up and then they went back down. So it's one of those things. You can sign up on our website. We have a market watch where you can get the daily email of what the rates are. But if you have a mortgage and it's anything over 3.5%, I would highly encourage you to take a look to see if you could refinance. The rates are significantly lower than they've been in the past, so it can definitely save you money. Auto refinancing, if you have an auto loan, anything over 3%, I would take a look at possibly refinancing. Student loans, not the time that I would recommend to refinance student loans especially if you have federal ones, because the federal loans are at 0%. If you were to refinance, you're not going to get a better rate than 0%. So that is not something that we would recommend. A couple of other options that I would say too with student loans, we don't know what's going to happen with student loans. Like, we just don't know. The federal government doesn't know. It's all up in the air, so we will see. But as a result, I don't quite know what's going to happen with private student loans. It may be one of those that it may be worth waiting a little bit to see what happens in the next couple of months. But definitely by fall, I feel like we should definitely have a better idea what's happening there. There are also debt consolidation loans and credit card balance transfers. So if you're trying to increase your cash flow and you notice that a lot of the money that you're paying is going towards interest and not principal, refinancing or doing a debt consolidation loan or a credit card balance transfer can help you do that. A debt consolidation loan will take all of the different debts that you have and pay it off on your behalf. And now you have a new loan with that company. Typically with debt consolidation loans, you have about 5 years to pay it off. The exact term will vary depending on the lender. But let's say that I have a credit card balance, I have medical debt, I have a personal loan, and it's all due in the next year and a half. The interest rates are fairly high. I may be better off doing a debt consolidation loan. The rates for debt consolidation loans tend to be lower, about 5%, 7%, depending on the lender, than the debt that's usually consolidated. So even though you are extending the terms for debt consolidation loans, most people end up saving interest because the debt that they're consolidating tends to be double-digit debt. And that is very common with credit cards. A lot of credit cards have double-digit debts, therefore, you're making those monthly payments, but that $200 payment, maybe only $50 is going towards principal. So that $150 that's going towards interest is money that, if you refinance, could go towards the principal, or depending on what your goals are with your increased cash flow, could maybe be going towards savings or some other goal that you may have. With credit card balance transfer, what these are, you could take debt that you have with credit card A and transfer it over to credit card B. Typically, they have an introductory rate of about 0%, or sometimes I've seen 1.99. There is usually a fee. It's usually called a balance transfer fee for bringing the debt over. That will depend, again, on the company. Some will do 2%, some will do 3%. I've seen as high as 5%. The challenge with credit card balance transfers is that it typically is an introductory rate for a set time period. So it's about 12 months, 18 months, depending, again, on the company. I would always recommend, if you are doing a credit card balance transfer, do the math beforehand and set up automatic payments for that amount, and try not to add additional debt to that card. That will help you increase your cash flow, because if you're able to plan it out for a year or whatever time period it is, as I mentioned before, more of the payment is going to go towards the principal. So that can help you either pay off the debt faster and have access to the cash flow, or if you are paying, let's say, $200 now, and again, only 50 is going towards principal, maybe when you do a credit card balance transfer, you can pay 150. That most of that will go towards principal. All of that would go towards principal if you're at that 0% introductory rate. And then that additional 50 could be the money that you use to increase your cash flow to go elsewhere. Some of the benefits of refinancing, I'm a numbers person, so sometimes it helps just to look at the numbers. So here we have a couple of examples. We have a $10,000 loan with a $200 payment for 60 months or 5 years. The interest rate's at 7%. Our monthly payment is at $200. And our total interest paid, which is going to be a big piece when you're doing any sort of refinancing, you want to have a number to compare it to and see what the true benefit is. That total interest paid is the total cost of the loan. In this case, it's $1,800, and it's a 5-year loan. But if we're able to refinance, as you'll see in here, to 5%, so we drop it by 2 percentage points, our monthly payment is reduced. So we are saving, about $11, which may not seem like a lot, but keep in mind, this is an approach that you would do with multiple debt. And also, depending on the rates, you may be able to save more. But here we notice that the total interest paid, you're saving about $500. So that's another benefit. And that's money that can go towards, again, another goal, something other than paying interest. And here we can also see, if we know that we are trying to increase our cash flow, but let's say that you do this and you've done this with a couple of other loans and you realize, you know what, I've increased my cash flow and I actually can now comfortably do the 200 because I minimize my expenses in some other ways. Here you'll see that you can save $600 in interest. And the other piece that I want to point out, not only are you saving interest, you're also going to save those 3 months. So that's 3 months earlier that you'll be done with that debt, which means 3 months earlier that you'll have access to that $200 monthly payment, so it can go towards something else. We talked about the importance of credit score and with the rates and refinancing, and in order to usually qualify, you are going to need a higher credit score. That's not to say that with a credit score that's not high, and by high, I would say anything over 670, 700. If you're not there, you can still qualify and you can pay off debt, and then once your credit score goes up, refinance again. We always recommend pulling your credit report. You want to be empowered when you're applying for debt, so that when you are applying and you are applying for a loan or taking on additional debt, it's not the first time that you know your credit information. You want to be empowered so when you apply, you're not surprised by something. And this is something you could do. It's free. Does have the word .com, does not have the word free in it, but this is where the federal government, where the three major credit bureaus, Experian, Equifax, and TransUnion, have to provide your credit report to you for free, and it does not impact your credit score. Even though it does say annual in the name, because of COVID, you can actually get your credit report once a week for free through April of next year. And this was something that they just expanded. It originally was through April of this year, but they've expanded it so that folks can keep an eye on your credit, especially because a lot of lenders, like Sarah mentioned earlier, are giving skip a payment. They're giving so many options, and the federal government wanted to make sure that people had access to their credit report during these times where payments are changing. And folks, even with your credit card, sometimes they've been able to reduce the payments and they've said, oh, it's not going to impact your credit score. Now you can verify that information yourself. Another way of increasing your cash flow is using your household benefits. And what do we mean by this? Well, for some of us, you may perhaps live with a partner, you may have children, parents, siblings, you may have others in your, or good close friends, you may have others in your community, in your network that have access to different benefits. And these benefits can essentially help save you some money. So what are some of the benefits and perks? Well, your employer can provide some. I know for where we work, where as Harvard employees, we have different options. Like we can get a discount on our cell phone provider. We can get discounts on insurance if we utilize the companies that our employers refer us to. So that's an easy way. If you're already utilizing a service, so insurance, most of us have insurance of some way, whether it's our home insurance, car insurance, rental insurance. That is a way to see if you can get a discount. Typically, I've seen insurance discounts with employers, and also your alma mater tends to have them as well. Financial institutions, this is something else. A lot of financial institutions will have on their websites, and credit card companies as well, discounts if you go through their website. I will say this is typically, they've gotten better with this, but sometimes you have to be on the actual desktop version versus mobile. It's not as mobile friendly, the discounts, though they have improved. So if you have to purchase something, and I'll use taxes since that's so timely. Like if for folks that use TurboTax or any other software for filing your taxes, many financial institutions or even phone companies will actually offer a discount if you go through their link. So before you make a purchase, even if it's not a huge purchase, just look onto those websites, familiarize yourself. Health insurance is another one. Health insurance, and many of you probably already know this, but with health insurance and medical, if you go through your health insurance company, you can get the discount for gym memberships, or because of COVID times, if you buy certain equipment, you can also get discounts on if you're sending someone flowers. There's so many different things that you wouldn't think you would get a discount through your insurance, health insurance, but you can. And also city and state, depending on where you live, if you go onto their website. This is all to say, before making a purchase, or if you ever, sort of put it on your list for a thing to do this weekend, pick one of these and go onto the website and see what benefits are available to you. We've also, a couple of others that come to mind. There are benefits for lawyers. If you need legal assistance, you can get a benefit discount through that. But there are many different discounts that are available that we may not be utilizing and can help us increase our cash flow. And these are not just for our employer, our financial institution. These could also be for those in our households and close circle. Another way of increasing cash flow is increasing income. That's, we wanted to put this out in here because we know it is another way. We also realize that it may not be an option for some of us, but we do understand that there may be times in our life that it could mean either looking for an additional job, maybe it's a part-time job. It could also mean maybe doing some research, looking on the Bureau of Labor's website to see what is the average rate salary for your current role, and maybe it's time to ask for a promotion or ask for a raise depending on how long you've been there and other skill set, or maybe you completed a degree and now perhaps you can be given additional compensation. We do again realize that not everyone's going to be able to easily increase your income. We are including this here because there are times that it may have to come to maybe that additional job, or maybe looking for part-time work, or maybe a hobby that can turn into a hobby that you actually can become a side business. And that is something that there are many different resources available to help with this, but we do encourage you that if you after we went through all of these, depending on how much you want to increase your cash flow, that is also another option to look into. On our blog, we have a lot of different resources. We do a lot of blog articles on reducing expenses and other ways to increase your cash flow. You are welcome to subscribe. You don't have to subscribe to get the information that's available on our website. If you do subscribe, you'll get the email sent directly to you. You'll get a recap, so you're not going to get one every single time we post a blog article, but you will get a recaps. Right now, we do have checking your paycheck health. One that we had a couple months ago was about paycheck health. And that's another way too of possibly increasing your cash flow. If you're noticing that you're getting refunds that are pretty significant and your financial situation isn't changing year to year, sometimes adjusting your withholdings can help you have more additional monthly cash flow. Do keep in mind though, if you do that, usually means a lower tax refund, or there may be times, depending how much you adjust, that you may owe taxes instead, which may not necessarily be a bad thing if you are owing maybe, and I'm making up numbers just for the example, but if I'm gonna owe $500 in taxes, but I don't have to borrow $500 or more than $500 and pay interest on it, that actually may end up being a better situation. So there are different things to consider, but we go into a lot of details with different topics on our blog, and you're welcome to subscribe. Now we went through a lot of information, so Sarah's dropping the survey on the chat, so you can please complete the survey before you log off. But I am going to give you a couple of different next steps. And as I'm doing these next steps, I ask you if there's anything that I can clarify, please let me know. And I do want to remind folks, this is a general presentation, so I'm not recommending any specific tax advice or investment or legal advice. We don't know your specific situation. So we do recommend that you contact Greenpath for credit, that you contact other professionals for tax or investment advice. And keep in mind that one of the best things you can do is to be informed. And if you're not comfortable or confident once you receive some information, continue to get more answers until you are confident, because we want to make sure that you're feeling empowered and you're making decisions based off of all information. And that is why we keep ours very general. So I do want to do a quick recap just to remind you, when it comes to increasing your cash flow, there are 3 things, like Sarah mentioned at the beginning, that you can do to really help increase that cash flow. You can reduce your expenses, or reduce or defer your expenses, and then you could increase income. And we went through a lot of topics today. I always recommend, before you log off, write down one action item. What's one thing you're going to do this week by the end of this week? And you define that, whether it's literally Saturday or maybe it's Sunday, you can decide, or Friday, maybe it's a work week. What's one thing that you can do to help increase your cash flow?